Hey, what's going on, everyone? My name is D. Anthony with Evolution Traders. What we are going to look at today is going to be the NASDAQ futures. And the reason why we're going to be looking at the NASDAQ futures is because for the past few days, I've been kind of covering each day's close, been kind of looking at the chart, noticing some things that are going on, and to better help everyone get ready for the next trading day. So it was a few days ago now where I kind of talked about distribution, right? Where we weren't really putting in a new high, we're not really putting in a new low. Now, does that mean that there's no opportunities for you to trade? Of course not. There was still some fantastic moves today. You're always going to get price action that's going to, trade with inside of a range when you're in distribution. So when you think about distribution, the longer distribution is going on, the bigger the move, okay? So when we do decide to come out of distribution, that's ultimately the side of the trade where you are going to want to direct your bias, okay? So if we break to the high side, you are going to want to be long biased. You are going to want to, trade long. If you notice, we are in a 1, 2, 3, 4, and now in the after hours, starting our 5th day of distribution. Now, I kind of mentioned that distribution lasts anywhere typically between 3 to 5 days. So we could be getting a move coming out of this range very, very soon. However, it's not set in stone. Look at the last time we went through distribution on the NASDAQ 100. Okay, so if you notice this range where I drew the box, this is going all the way back to November the 15th to around December the 7th. So we're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days. We're talking about a 3-week distribution. Now, why this is important is because when we came out of this distribution, you can see the move that we had. We had the March contracts for the future start to roll over. So we went from those December contracts to the March contracts. We had this little bit of a gap up here, which is not really a gap up. It's just due to the price change on the contracts. But it caused us to get out of distribution, okay? So if I was to draw a line going across at the last area where we kind of stopped at, that's sitting right here below this 50-day moving average. Now, the move coming out of this distribution lasted for a good amount of time where we put in this high all the way into 17,165. Notice the pullback and notice the start of the breakout, right? So if I was to draw this little pattern here, this looks like a perfect little double top here. Looks like some beautiful mountains. Notice the support system here. This is a fantastic 2-leg move higher. You get your first leg, you get your pullback, you get your new high, and then you get your pullback to the original breakout spot. So again, as we started to come back up, now we've started this 5-day distribution here where the range is getting extremely tight. Now, the tighter the range gets, the smaller the moves are going to be. And again, the longer you go where you're in distribution, the bigger the move. Now, we could still ultimately get a break down or a break higher. What I'm trying to let everyone know is that when we finally start to lose the bottom of this range, which is going to be getting back down below the 20, 10 day moving average, we kind of, trading below the 5-day moving average right now, that price would be, a loss of 16,753. That ultimately has room down to 16,946. So definitely keep this as a first potential area to stop. If we do lose that, I would be looking for something down towards the 16,300. So a potential 600 point downwards move. Now, does it mean that we have to come back down here? Of course not. But what I'm saying is you're going to have more than enough opportunity to make money on the downside. Now, if we do start to take out the top of the range, which is 17,057, I would look for an immediate push into 17,250. That's going to be getting out of this range here, and anything that closes over 17,165 is ultimately going to have some room to kind of push and trickle higher into 17,000 500, 600. So again, if you're a day trader, you want to be on the right side of the move. Again, understand right now we're trading within a little bitty, tiny range. Again, there's still opportunities to trade, but it doesn't necessarily mean that you're going to get those all day moves. You might get a washout off the morning that kind of goes back to the middle of the range. You might get a pop off the open, make some money, call it a day, comes back down to the bottom of the range. Until you see us start to close outside of this range, we need to treat everything as a scalp. So if you need to size down, size down. If you need to, not hold on to trades as long, if you need to cut down your take profit, whatever you need to do to protect your capital and to be safe is what you need to do. The last thing I want to see is people losing funded accounts, losing evaluations for the sole sake of trading when we're in distribution. So just learn something and accept that market structure, the market environment right now is in a range. So until we get out of that range, we need to be a little bit more cautious. If you guys want to get this day-to-day analysis in real time while myself and the rest of the team at Evolution Traders is trading live, definitely join Evolution Traders at links down in the description box below. I still have one space available. In there, you're going to get access to all my entry lessons on how I'm taking trades, the strategies that I'm using, the risk management that I'm using, the consultations, the coaching, the community, the watch list. You get access to it all. I'll see all of you guys on the inside. To everyone else on YouTube, make sure to like, comment, and subscribe, and I'll catch you guys all tomorrow. Make sure you guys make some money and stay safe.